Thanks very much, Tim, and thank you to CEDA for the opportunity to speak to all of you today. What I'd like to do in the next 15 minutes or so is take you through what our Deloitte Access Economics, our view is of the broader economic environment in which we find ourselves and are operating. And I'd like to start, I guess, quite wide. We'll start with the global outlook and what those global drivers are, narrow it down to Australia, narrow it down to Western Australia, and then obviously what does it mean for the Wheatbelt region. But before I do that, I'd like to start with just a couple of summary points. If we look back over the previous decade, Australia as a country has been the fastest growing developed nation, rich nation in the world. And our forecast, and not just our forecast, but the forecast of most economists out there, is that Australia will continue to be the fastest growing developed nation over the next decade. If we look within Australia and we look at the states within Australia, Western Australia has been the fastest growing state over the past decade. And going forward again, despite going through a bit of a transition period at the moment, Western Australia will be the fastest growing state, or is forecast to be, over the coming decade. However, the opportunities which presented themselves to Australia and to Western Australia are very much changing. What we saw driving our economy over the last decade are not going to be the same drivers that we see going forward over the coming decade. But for the Wheatbelt, that's a really good story because those opportunities and those drivers are probably more aligned, even more aligned than the 6.6% growth we've seen to the Wheatbelt's asset base, if you like, than what it was previously. So it's a very much a good news story. Let's have a look at the macro perspective. And I have to warn you, I've got quite a few slides here, so I'll be moving through them pretty quickly to try to keep on time. We happen to be living through a period of history which we're seeing phenomenal change undergoing. We're seeing a huge movement of people in the developing world moving from rural areas to urban areas. So almost 1 billion people are chasing higher paid jobs and economic wealth creation, moving from rural areas in Asia mostly into urban areas. And so what we're seeing, this urbanisation is pretty much an industrial revolution on a scale that's never been seen before. So in the chart there, the dotted blue line is Australia's urbanisation rate, the dotted green line is the US's, we've got high urbanisation, and then we're seeing the solid blue line there, this is China's urbanisation, and they've gone from sort of sub 20% up to 40, onwards of 50%, and will continue to urbanise over time. And what does that mean in terms of the global dynamics out there? Well, for the first time in history, we're about to see China become a much more significant economy than the United States. In fact, if you extrapolate out a couple more years, the dark blue line and the light green line will cross, and China will take that mantle. But it's the speed, not so much the balance, but the speed at which that change has occurred, which is really quite remarkable. But it's got a long way to go. This chart here is looking at countries' GDP as a ratio to the United States. So if you're 100%, you'd have the same GDP per capita as the United States. So we can see the dark green line at the top there is Japan. They obviously went through development in the 70s and 80s and got to a pretty stable footing against the US of about 80% of wealth against the GDP number. And we've seen these paths. We understand these development paths very well. We know what will happen. If we look at the bottom line there, the light green line, that is China. So China, despite the fact that they're about to become the largest economy in the world, is still only has essentially living standards, which is what this graph represents, 1/5 of what the United States has. So China has got, despite what we've seen over the last couple of decades, a long way to go. There is a lot left in the tank yet. However, there are some risks. And while the last couple of decades and the future decades will be very good for Australia, very good for Western Australia, very good for the Wheatbelt, there are some risks. And as economists, we sometimes are a little bit glass half empty. We like to focus on what the downsides are. So it would be remiss of me not to be a little bit negative today. But these are things that we just need to be mindful of. When we look through history, the number one theme about this period in history will be the rise of developing Asia. But the global financial crisis was also very important, and we're now having to deal with the consequences of governments around the world, in response to the financial crisis in 2007, 2008, printing a lot of money, or at least increasing the liquidity of the banking system. And so we now have to go through a process where that's wound back, where that printing of money, if I can call it that, is wound back and interest rates go up. Getting that right is very, very difficult. And governments around the world do not have a very good track record of getting that right. If you wind it back too quickly, you've got a Great Depression. If you don't wind it back quick enough, you have hyperinflation. So hitting that sweet spot will be very, very important, and it does pose a risk to the global economy and very much to Australia. At Deloitte Access Economics, we're worried about China, and to be fair, it's probably our greatest worry at the moment, although we don't forecast any major fallout, but it is something to keep an eye on. China's economy needs to transition. It needs to transition from a capital-intensive economy to one which is a bit more rounded, a bit more consumer-driven, and a little bit more service-orientated over time. They also have a banking system. People might have heard the term the shadow banking system. They've got a banking system which is largely unregulated and has been funding a lot of the residential developments that we see in China. 63 million apartments in China, which currently have no one living in them. Now, people ask about property bubbles in Australia. My definition of a bubble is when you build something and it generates nothing for you, generates no income stream. And that is potentially what we do have in China. So the Chinese government's ability to manage that will be absolutely critical to our outlook and obviously the iron ore price. And also we should be worried about Europe, European banks and European growth. Europe's still a bit sick. It's not coming off life support yet. And it's got a little way to go to get out of the woods. So look, some risks there. However, despite that, as I said before, we still forecast Australia to be the fastest growing country over the next decade. This is just a ranking from out to 2024 of average growth rates. The top ones up there, as you might expect, are India and China. India number one. They are coming from a lower base, so we expect their growth rate to be slightly better than China. But all those other countries are the usual culprits, the ones that are still going through their development phases. Down the bottom, the more developed nations, a little more challenging, and the Eurozone and Japan are probably the two nations we're most worried about from a growth perspective. But the story is that Australia will do well and will continue to do well. And a lot of that has been as a result of the resources boom, call it what you will, resources boom, commodity boom. It's been very good for Australia. We see it actually in three different phases. It's not just one boom. There's been three phases to the boom. Economics 101, when the world wants something that you want, you can supply it, but there's not enough to meet demand, prices go up. And we saw that in the last decade. Prices went up. That's represented in the chart there in the blue line, our terms of trade, but that peaked in 2011, and it's come back off. 15 months after we get this price signal from the world, we start building. We start building a huge amount of stuff. We build mines, we build railway lines, we build ports in response to these price signals. And that's created a bit of a sugar hit for the economy, which has been the construction boom. And that's represented in the light green line there, which is capital investment. But that too peaked in 2012, 2013. And we're coming back off, slowly coming back off the other side. And we're now entering the third phase of the boom, the operations or production boom. This is actually the most significant. It will be the longest running. And when we say the resources boom is over, it's not. It's actually in our mind only really just beginning. But it's different. It's different to what we've seen previously. And that transition between construction into operations does pose a few issues that we will need to transition. This chart here, a little bit hard to read and a little bit busy, but I think quintessentially captures some of the issues that we as a country and as a state and as a region will face over the next decade. This is a chart which Treasury put out about 12 months ago, and it captures essentially living standards. Right? There's only really three things which increase living standards. More people work, so more of the population works. That working population becomes more productive, or people give us a pay rise, i.e. they pay us more for what we're already selling, right? Those three things will give us a pay rise, so 3 Ps. If we look back over the previous decades, so the first bar chart there looks at the 1980s, it was really all about female participation in the workforce. We had a huge cohort of active workers joining the workforce, and that gave us that marginal uptick in living standards. We moved into the 1990s and it was all about productivity. So we had a lot of reforms through the 80s and into the 90s. Many will remember those. Love them or hate them, they delivered a huge bonus for the Australian economy. We became much more productive and we got the benefit of that through the 90s. Then we look at the last decade, or that's from 2000 to 2013, and it's all been about the price hike. Developing Asia paid us a lot more for our iron ore and coal than what they did previously. So we got the dark blue box there, we got the uptick from that. Going forward over the next decade, what does it look like? Well, we're actually likely to get a price cut from Asia as supplies caught up with demand and price drops off. We've got the baby boomers retiring. So in fact, that will actually be a negative to our living standards. So really what it comes down to, it's all about productivity. And that's not a forecast, by the way, on the right-hand side there. It's just taking that light blue box, it's just taking the average of the previous first decades. But it does demonstrate how incredibly important productivity will be going forward into the next decade. And I'll talk a little bit about what that actually means for the Wheatbelt. But firstly, I guess the bigger picture is that WA has been on the right side of history. In terms of generating wealth, there's really only two things you need. It's a very simple formula to create prosperity. The world needs to want something, we need to be good at supplying it. If you get the crossover of those two things, then you create prosperity for yourself, and those three Ps should all align behind that. But as I said before, there is a bit of a transition underway. We've done a little bit of research into where prosperity will be created, what are those next waves of opportunity. I'll say post the mining boom, but the mining boom is continuing. But what are those sectors that we should be putting our attention into? And I won't go into detail on this. We've got there's publications on our website if people want to have a look at it in more detail, and it's quite granular. But what we've identified is a number of sectors that we should, as a country, focus on. That intersection in the top right-hand corner there, where the world wants something, i.e. in the y-axis it's about sectorial growth, and on the x-axis it's about where Australia has a comparative advantage in supplying that, i.e. we're better than other countries around the world. And where those two intersect, we get the Fantastic Five, or what we're calling the Fantastic Five sectors. So we've got agribusiness, gas, tourism, international education and wealth management. They are the sectors where resources need to be allocated. We then looked in a bit more detail and went into a bit more granularity around some of the subsectors in there. So not just focusing on what does global growth look like, but on what are some of the major demographic trends, what sort of opportunities they might create. And if you think ageing population and the obesity crisis, then you get a number of sort of hotspots, if you like, number of more smaller, but definitely no less important opportunities in which to invest and chase. And a number of these will be very important for the Wheatbelt. If we look at the Wheatbelt in itself and its economy and the makeup of its economy, this chart is again looking at all the different sectors within an economy, and it's comparing the Wheatbelt with the Australian economy. And there's a bit of a standout there. So if you were at that 100% line, it essentially means that sector is as important to the Wheatbelt as what it is to the Australian economy. And if you look at this, there's a clear standout there. The agricultural sector is by far and away more important to the Wheatbelt than it is to the Australian economy. But if you took that bar away, what you'd find, as we've heard before, is quite a diverse economy in the Wheatbelt. So it's not just farming, there are definitely other opportunities out there. And it makes sense, right? The opportunities going forward and this sectorial split, if you like, presents huge opportunities for the Wheatbelt going forward. So if you think back around the prosperity map and where those opportunities will come from, agribusiness was absolutely at the top right-hand corner there. Farming is important to the Wheatbelt. That alignment will create great opportunities. But it's not just farming. Training and education. I think it's the second highest or outperformer, I guess, relative to the Australian economy. Farming will be very different going forward. The nature of farming will be very different. And so why wouldn't the Wheatbelt try to jump onto the bandwagon and provide the training and the expertise around those opportunities? Renewable energy. We've already heard about renewable energy being very important. Again, a sector which offers great opportunity for the Wheatbelt. So I guess in summary, the potential for the Wheatbelt, I guess, in terms of those sectorial hotspots and those opportunities that are coming along the next decade are significantly greater than what we've seen in the past. I very much look forward to the rest of today. I think we'll hear a lot of speakers talking about these and where the Wheatbelt can take handle of these opportunities and make the most of the coming decade. So thank you very much.